The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome to another excellent edition of the Power Trading Hour. And as always, we come to you at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So, first thing I want to look at is what we had for volume this morning. Right now we're doing about 6.7 billion shares. It was a pretty quiet move on the way down after the first move up here today. Volume is not that much better. Starting to look more like we're going to be caught in this trading range into Friday. We'll see whether or not we can move a little higher. I assume a lot of people have gotten short. So we'll keep a close eye on the S&P. But up 20 points on the day, but nothing to write home about. We don't have a lot of downside. We don't have a lot of upside. The one case would be you move enough to get a short squeeze going. But I don't see that from the volume yet. We'd have to get the price up a little bit more. Options have been curtailed a little bit as of yesterday. They started moving down the peak to maybe 4,000. So maybe we get there tomorrow, but it certainly doesn't look like we're going to have anything that moves toward the way of escape velocity for this, let's call it mid 3,900s on the S&P cash. So I would say realistic that there isn't a lot of downside and not a lot of upside. Maybe we can find some numbers or some news that is going to actually change that, but it certainly looks like we're more likely in some doldrums unless we can get a short squeeze moving. Not a lot of volume to the downside, not a lot of volume to the upside this week, and generally you stay that way until a shock to the market gets you out of it. Of course, overnight, last night, we had CRM, which is Salesforce. It's up 12% today. But you could see how many people that were invested in this, and some new investors in here were working extremely hard to make the case and get this thing going and go on CNBC and beat the racehorse, take it to the whip, because my guess is they want to get out of it. They know it's got problems, and why people may be invested in it. More interested right now in telling the current CEO to quit buying stuff, and not only that, but start cutting head count. Let's get this. Let's fatten this thing up. Actually, there's a word, not a word. There's a saying on Wall Street when you've got a turkey, you want to pretty that turkey up. Maybe it's not always a turkey.
Well, let's put some lipstick on this pig.
Well, that's what they're going to do. I don't see a lot in here that changed. We talked yesterday about how many ads these guys have been running. They also have been all over the East and West Coast with sales associates trying to get business. It's probably not going to, in the long term, make the money. In the short term, though, it's probably going to make Salesforce look good to some folks. But I don't think anything they've done or anything they're talking about, other than quit buying companies and then destroying them. They've done a horrible job with Snap. My guess has always been that this thing may be investable again, certainly tradable, but maybe investable again once they get rid of the current CEO, who's had, I'm going to say, 10 years of abject failure. And really, if it wasn't CNBC carrying his water, mostly the one person that we talk so much about,
Bring me the head of the false prophet, Jim Cramer.
Who's been a one-man band on keeping the stock up and talking it up because he's good friends with the CEO. But, yeah, as I said, just not that much out there. Could you have been too short? Yeah. But there's a lot of ways they can make, at least for 1 or 2 quarters, the earnings look a little bit better. Why they get this thing up and try to get out of it. And exit stage left. 877-927-6648. What else do we have out here? Let's take a look at Tesla real quick. They had their investors day. Everybody was trying to tell everybody that he had a whole bunch of rabbits in his hat that he was going to pull out yesterday. Didn't so much. You've kind of got this where I'd love to see a pop back above $200 and then very light volume, and then that would be it. This could be it today and the move back down to $150. But, you know, there's still on a daily basis about 30 to 40% short sellers in Tesla. And generally, not always, but generally, you're going to have to probably get down into the low 20s to find Tesla cracking. If it does continue to move down, just expect it probably not to give it all to you in a single day. What else did we want to look at? We looked at that. Probably the most interesting thing to me in technology, see if I can actually find it here, and that is NVIDIA control panel, was something I was playing with last night. If you have one of the RTX series video cards, there's something that is incredibly interesting to me. That is a real-time AI or machine learning super resolution mode in their video cards. So anything from the 2060 RTX cards and higher, you can use this video enhancement. And it actually works very well. We'll talk about AMD in a minute, but I thought it was very interesting. This did ship with the new video driver yesterday. And I can't show it on TV, on the podcast here, because I'm going to have it limited just the way it would be limited. You can't make a recording of a recording if that recording has lower quality than the previous recording. But one of the things this does is actually make it look like 4K. And for most videos on things like YouTube and stuff, it literally looks like magic. It doesn't work as well on really fast-moving stuff. But if you go into the control panel, click on Super Resolution, leave it at 1, it does make regular HD stuff look like extra HD stuff. And of course, we continue to look into others, as we said. Dan Loeb getting a little bit pregnant in AMD today. We'll talk about that when we return.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, certainly the story of the day, we'll get to AMD in a minute. The story of the day is the TLT and bonds. Certainly gapped lower and suggests that even though we're on a little bit lighter volume than we've had before, unless we turn around and close above 99.35 tomorrow on the TLT, it suggests that we're going to see a continued move, probably to 96 on the TLT. That actually has us set up for something interesting, and that is if you look at all the models, that pushes the height now of the top of interest rates from 5.5% to 5.75% today. And that is going to put a cloud over the markets. Of course, the job of the Fed is to slowly wean us off of all the free money and to slowly turn the temperature up so that everybody gets frog boiled. And I don't know if there's anything more to say about it other than that. I don't see you saw a couple people come out, try to maybe sweeten it just a hair, take a little hair of the dog with the whiskey today from the Fed, but I don't think, really doesn't seem to change much in my view. And that is that you get back down to 96, that would probably set you up for a 6% top rate. Well, not that far away with 5.75 right now. 877-927-6648. Email me at path@tfnn.com. Okay, so, yeah, am I expecting anything? No. Options have kind of moved down, and they're looking about pretty much around where we're at the moment. Now, maybe we get some news that shocks everybody tomorrow, but absent some big news, I think we've got probably another day of range-bound trading as we go into Friday. Question about the dollar. Of course, a whole issue there is... let me find it here. I don't trade it, so I just use the website to take a look at it. Yeah, I think they're trying very hard to peg this at 105. Every time we go back down a little bit, there's a lot of cajiggering by the Fed and the Treasury. Every time we go higher than that, they try to throw some cold water on it. But I think that they do want kind of this mid 105 area as the area we settle down in. So I don't know if there's a whole lot else to say. Every time it looks like it's going to break out of the bottom, they come to the rescue. Every time it looks like it's going to go to the moon and up to 110, they have a bucket of cold water. They do the ice, the ice cube challenge? The ice water challenge? Can't remember now. It's been a few years ago. On it and try to get it back down. But I'm going to say that they're really trying to set us up for a more normal market where we're going to have the dollar, to the extent that they can, probably go back to pre-pandemic ranges of normal movement in the dollar, and at the same time try to slowly move up interest rates on the other side of it. But you got up to 105.15. You're back under 105. Just seems to me like there's always some good news when it's low and there's some bad news when it's high coming out of the Fed or the Treasury or both. Ice bucket challenge, that's what it was. Now, how quickly we forget. So, don't think there's a lot to say there. If I see anything that changes my mind, I'll certainly bring it up. But that's probably why I don't spend a lot of time talking about the dollar, and that is I think that the levers of power, the Fed and the Treasury, are pretty committed to trying to keep us in this middle of the range to the level that they can. 877-927-6648. See if there's anything else. Oh, we wanted to go to AMD. Dan Loeb came out about 1:30. I think maybe he was on CNBC, said he bought a junior starter position in this and kind of turned it. It wasn't a bad day. To begin with, you were down on lighter volume. You're up a little bit. But I don't think AMD is a pretty big company. I think you're going to have to throw some more money. He didn't take an activist position. He took a passive position. Now, maybe that gets at another level. I would say that if you're a Wyckoff trader, this is exactly where you would want to buy. You have the big move on huge volume back on the 1st of February, 152 million shares. You go up in the last 3 days or 4 days back at this level. This is what accumulation looks like. You get back down to lows. You don't have a lot of volume. Every time it seems to go down, there's somebody that's willing to wait 5 minutes and then start buying. The difference between people that short is they don't wait 5 minutes. But if you're talking about somebody on the street, they can wait 5 or 10 minutes, let the bloom come off the rose on this, and then they're back there buying. But certainly you can really say that since the 17th, this has really done nothing but go sideways, and for the most part, on lighter volume. NVDA. Now, here's where you're in real trouble on some of these semiconductors if you don't continue to move up. And the move a little bit higher off the open today on very light volume is also problematic. But if you were looking for some kind of big retracement, NVIDIA, maybe AMD, and some of these others, any close below the 3x3, I think could get you started in a fairly standard pullback. If you're just looking at 382, that takes you right to $200.66 from this move all the way up. So, as I said, you're at 238.88 the other day, 4 days ago. So, I'm one that more than willing to let this thing get. I hate even the thought of shorting it because they do have so many different ways of making money. They do have a lot of new stuff coming out. I still find their lack of revenue growing problematic. But again, $200 would just be a normal retracement on that. So you've got a pretty good move up here. Just wait over the next couple of days. As I said, I've always thought that the big move was going to be down or more next week, not this week. So we shall see. Let's go to the mail. 39.70 on the S&P cash, up 18 points. Oh, okay. Well, we'll do the mail when we return.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And what do we have out here? Let's see if there's anything else going on. Anyway, we looked at NVIDIA. As I said, most of these need another day or two to pop back above the 3x3 and then close back below. But we'll see. Let's take a look at some of the other ones that are moving today. Let me get through here today. Get started here. We looked at Tesla. Hormel. This poor stock. They beat on this thing regularly. I never understood why, but certainly this one did take the big sleep today. down on some decent volume. But they've been going after this one for like 2 years straight. And I don't know. It just seems if I was going to be short, I'd want something that had a story that ended before the length of War and Peace. That's a very long book if you live in Lutz. So there's not much going on there. One of the things that also disturbs me on the AMD NVIDIA front is that Micron did gap down. It really hasn't come back much from today. It was sitting right at confluence and finally broke through. That was 58.93. So you've got a big gap down in this, and it looks to me like it's going back to about 51. So that is problematic. On the SMHs, now on those, you have a pretty nice setup here, and it's kind of telling you where where you're going to find support, and that is the confluence level at 219.12 to 221. And I think you got to, especially with some of the other stocks, I mean, AMD, you're going to get a pop in today and some other ones. But when these things roll, it's not the end of the world, but, support, you could just look at the chart and see that 220 was kind of a level where you went sideways for 2 weeks. And that'd be pretty logical to see it. That you have confluence there, too, is pretty nice. But if you were thinking about this, you're going to be back over the 3x3 again today in the SMHs. I would just say it's the next one down that you'll probably have fairly fast move to that 220 in the S&P, or in the SMHs, by the way. Anybody have any questions on anything else than the den? Please post them. Where are we at now? Let's take a look on the upside. We already talked about CRM. Take Two has a nice pop today, 5.6% higher. Doesn't really change much of anything else in it. Let's turn that off so you can see a little bit more. You do have some decent volume back up to the somebody in the den's talking about that NVIDIA driver. You've got to be using Chrome and go to YouTube and look at their videos in full screen. And that's where you'll see the difference. It doesn't happen everywhere else. It only happens in playing videos, by the way. Okay, nice pop higher in Take Two. You're just back up to this gap down that goes back to the 16th. You had 1.4 million shares. You got about 2.8. It's not a bad day out here. I didn't see the headlines on it, but I will look very closely. Okay. Okay. I don't see what this is all about, but we shall see. Okay. What else do we have? Okay. Question about Adobe, ADBE. As I continue to keep an eye out. Now we're up 24 points. Maybe they are going to get a little bit of a squeeze going here. 21 points now. You're just back into the downtrend line, so I don't see a whole lot. You gap down on huge volume. You're back at what would be resistance to the upside. I would say you're going to go sideways for a number of days at best. So I don't see any reason to get back into this at the moment. I don't see a lot of downside either on it. Let's take a look at Yum, which is up almost 2% on the day. Does have a very nice wide-ranging bar today that really engulfed the last 2 days. The problem is you just don't have any volume so far. So you may want to check that later in the day. Win, WYNN. Certainly a nice breakout. Let's see if that goes back any farther. No, that's it's pretty good. I don't see a lot out here other than I wouldn't chase it, I'd wait for it to pull back. You really wanted some more volume, I guess, is the biggest problem. You gapped higher than the 9th of February that had 7.1 million shares. You only have about 2.4. Any close back below really the 108.59 would be problematic for this. That could be a false breakout. We have somebody, what do you think? RMBS. Rambus, if you're not familiar with this, this is a licensing company for semiconductors, mostly memory. You could make a good case this thing was dead for a while. Anytime you have new types of memory like DDR5 that are out now, you make maybe an order of magnitude in the first year more than you will years after on the new technology. It's more expensive to make, but you can also charge a lot more for it. And a lot of these licensees that are tied to Rambus are that way. I haven't paid any attention to this company for forever. But they basically made a cartel for memory chips a long time ago and collect all the patents and make sure that if you're part of the boys club, then you're in. If you're not, they'll make sure and keep your memory chips out of Western countries who actually look at things like intellectual property. So a whole lot of nothing today on this one, although it is holding up there higher, but not, if on this one doesn't move as much as many of the other semiconductors. What I dislike about this is the high volume low of February 7th that challenged the January 31st low of much lighter volume. Like I said, Micron is problematic in that space as they tend to be the leader on what they'll be able to charge. Right now, for Rambus and their licensing fees, everybody has to kick in. So it's not so much right now how well those guys are doing as them collecting all those licensing fees on the new type of memory that really over the next year, 18 months is going to be pretty big. We'll be back in a minute.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
And as we return, Duffy in the Den points out desktop metal had a huge pop. It is a penny stock. It also has 18 days to cover. So just know, like most of these stocks, you can just a little move or even good news can set a lot of people on the wrong side of the fence if everybody's on that same side of the fence to running. So certainly you can get some good news. Is it overblown? Well, 18 days to cover tells me that there are a lot of people that stayed at the party way too long at a $1.50. So I don't know what else you can say about that. As we go to earnings after the bell, it's going to be Costco, who did open lower, came up, light volume today. Don't know if there's a lot more to be said. I think they have the same problem that Sam's and Walmart do, and Target does, and that is the prices of stuff coming from China, which is a big bit of what they do. Dell is also back at lows. Computer sales, especially for desktops, are incredibly low right now. They kind of fell off a cliff after Christmas. Unclear what they're going to say tonight, but it'd be interesting to see. You're down on pretty heavy volume already. Also, in another sector that seems to be rather weak these days, and that, of course, is the smartphone business. Avago, just kind of treading water. I don't see a lot in this one way or the other, but we'll find out. Since they own so many different parts of the ecosystem of smartphones, their results are probably going to tell us a great deal about what else is going on. In the enterprise, we've got HPE, which is the enterprise division, back down. Actually, if they didn't have earnings, I'd probably want to be long this thing. You've got a nice little doji on 6 million shares against the December 19th low that had almost 32 million shares. But they are having earnings, so I wouldn't do anything. Back to retail, we look at Nordstrom's. These all have earnings after the bell, by the way. Actually, not a bad-looking pattern, which is a huge move higher in volume on the 3rd of February with almost 41 million shares. You pull back to where it actually started from, and that's generally not a bad place to get in. The downside is you have earnings. VMware, which is a company that is kind of a shell of its previous self. VM. If I can type VM, right? Okay. Okay. VMware, we're back into this gap that pops higher. You don't have a lot of volume today. As I said before, the big problem is that this is a company that got looted by one of their major owners, which was Dell. They split apart, but it still has a lot of lingering problems and probably more than a few skeletons in the closet that they got stuck with on the exit when they went Splitsville with Dell. Marvel Group in the semiconductor space, little move higher, volume's okay, but not great. Hard to say on that one, see if there's anything else. Zscaler, also out after the bell tonight. Just going sideways. I don't see a lot in that one either way. We got about 3 minutes. Let's go through the usual suspects and see if there's anything going on with them to move the major indexes like the NASDAQ. Apple is back down and has filled the total gap. It's got a little less volume here, but really didn't act very strong. In FLX, he said. Okay. Netflix is down. Light volume out here, although you gap lower. It's got to be around support. I still think that you've got another 6 months or a year why these streamers work out the fact that they've got far too much content, and a lot of it is incredibly average or worse. They'd be much better off focusing, spending a little bit more money on less projects and making sure they're a little bit better in quality. So to see if there's anything else. Nope, don't see it. Let's take a look tomorrow morning. I don't see much of anything going on that. Hibbett Sports, probably the only one. HIBB in the Hibby. Gap down today. Not much in the way of volume there. Let's take a look and see what we have next week. Sienna Monday morning. CIN. Say. Okay. I mean, it's not a bad pattern. You gapped higher. You did it with lots of volume. You came back. You had good volume on the pop yesterday. Again, you're betting on earnings, but the pattern actually is not that bad. Let's see. Where are we at here? Okay. And I don't see much. We'll see after the bell. Nothing exciting on Monday. Tuesday morning, Dick's Sports, DKS. See if there's anything in that one. And it's just been going sideways. Okay. And after the bell on Tuesday, it's pretty quiet next week. Let's see here. Wednesday, is there anything that matters? Nope. Thursday next week, we've got JD.com, the Chinese outfit. This has kind of come back. Of course, it tends to have a lot of smaller gaps from dollar exchange. You did gap up today, but didn't have much in the way of volume. So you got another almost a week, well, actually a week from today. I don't see much in that. Now, one of the other stocks that seems to be perennially thinking it's going lower is Ulta. Next Thursday night, so you're a week away, ULDA, he said. Well, it has finally closed a little bit under the 3x3, but nothing exciting so far. We'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we said, a week from today, we've got Ulta. Always discussion in the den about long and short, but I don't see any of the lines of people going in and out of those places any shorter. But eventually, maybe they'll have all they need, but that's not it. Quick question, take a look at CCJ. And the big thing I wanted to look at them was on earnings. You almost always need a couple of quarters after somebody has a big buyout, as they did. The next one's on May 11th. I would probably give it a little bit more time if you're talking about buying it long term. If you're just talking about a trade, you're probably okay. But, you know, is this kind of on the rich side of what it's chalked up to be at the moment? Yes, it is. So don't see a whole lot else in that. See what we have here. Okay. Do we have anything else? Okay. Want to take a quick look for James on PLTR. See if we see anything in that. We talked about this one, I think, yesterday. And as I said, a lot of these don't look too bad on a Wyckoff style buy. The bigger problem I would have is the general market. For a day trade, maybe that, but the market kind of looks like it's setting up for weakness next week. And that's what I'll be looking at. So I need to see a change or some volume come in or something change in the broad markets. The big news today, of course, is that is the bonds, the TLT. Keep an eye on that because that's going to tell you a great deal of what happens in the equity markets. Sell when you can, not when you have to. We shall return.
Building wealth trading in the stock market seems impossible to most